We're live. Hi Mo, welcome to Adventure with Grace. I'm sorry. Every time I act like it's a
It's
major
good.
surprise, though I click the button. But um okay, so for the audience who first got to know you, let me start with like I feel like you accomplished so much since like the time we met, like literally over I would say like 8 or 10 years ago, like 8 years ago, maybe it's not 10 years. But anyway,
It's been a
so
while.
it's been a while. So like I want to start with like, what are some core lessons that you've learned from, your um operator age, which is like Lockheed Martin or like In-Q-Tel. What were the things that you learned that you feel like are useful for your career in venture?
For sure. First off, thanks for having me on this, and same to you. I mean, it's been amazing to see what you've done with the podcast and all the amazing guests you've had on. So I remember when we met, I think that was right. It was like very very early in my venture career, so it was like maybe a year or two in. So it must have been 8 years ago, and so it's amazing to see what you've done. So kudos on that. On my end, maybe I'll give you a little bit of kind of sort of my background as well. So I grew up in a small town in South Florida called Coconut Creek. So it was before the whole, kind of South Florida craze. Uh, I grew up there, spent most of my life there. Came out to school here at Stanford to study engineering, and then was an engineer early in my career before moving to the dark side of venture, if you
Mhm.
will. Um, and I would say, like, in terms of learnings early in my career, and to honestly, even what I do now, I think the focus on like continuous learning has been something, I it's always been like sort of a North Star for me. And I think regardless of where you are in your career or what you do, it's something everybody can sort of aspire to, because I think it's helpful as you sort of optimize the slope of your learning across different tasks and different roles. And so that's something I've always thought about. And the nice thing about before, when I was an engineer, I was sort of very focused on building one product as part of a larger team, contributing. And so it was great because you got to build something, but it was also very very focused. The unique thing about venture and other jobs sort of like that is continuous learning is sort of baked into the job, because you're learning about so many different areas, with so many folks who are experts in those respective areas, right? Whether it be biotech, AI. I do a lot of our frontier tech investing, so you get to learn new things constantly. So that's been one of the key learnings for me, and something I keep up.
Totally. I feel like continuous learning is like definitely really important. And I want to talk about maybe we could start with like, the general overview of threshold ventures, and then we can talk about your journey in DC last week. I feel like
Yeah, yeah.
very
It's
interesting.
very timely because
Mhm.
for some of the folks watching this, they might have the inauguration streaming in parallel, because it's happening now. So big changes coming. So I'll give you a little bit of my background at Threshold. So I joined DFJ in 2014. So we were known for investing in SpaceX and Tesla,
Mhm.
a number of disruptive tech companies, also companies like Box and Twilio and Livongo. So kind of invested across a number of different sectors. A subset of that team from DFJ Venture, DFJ's early stage firm, or DFJ's early stage fund, I should say, created Threshold Ventures. And so primarily, my partners, Josh and Emily, kind of spearheaded that, and then took a bunch of our team with us from DFJ. And we've kind of created a new firm that's focused on sort of a generalist firm that has a number of different areas of focus: healthcare, enterprise software, frontier tech, which I cover quite a bit. And so
Mhm.
all early stage focused, working closely with our founders. And we generally do seed, Series A, Series B. So a pretty, we kind of covered the gamut of early stage. But it's been exciting to see everything that's kind of happened since then. Have been working with a lot of great companies, and for me, everything from like metal 3D printing to biotech and to defense, which was
Mhm.
the related to the conference I was just at that you were alluding to.
Amazing. So I feel like frontier tech is very It's like I wanna say it's like I feel like it's totally on trend just 'cause, like, we're seeing, like, a evolution of deep tech that's being, um, revolutionized, like, slash, like, everyone's investing in, AI for, like, a traditional industry. I feel like that's, like, a popular trend now, but, like, since you have been doing it for a while, I wanna hear your perspective on, like, maybe we start with from the defense conference side, like, what are some trends that you're seeing that's really interesting?
Yeah, I so give folks context on some of this conference. I think I posted yesterday or the other day on LinkedIn about it too. But it was called like the future of warfare is put on by Shield AI, which is one of the top sort of autonomy companies, and then
Mhm,
Harpoon Ventures, which was started by a former Navy SEAL and Olympian.
mhm,
This guy Larson Jensen, and so I think they put on a fabulous conference, and I would say there was a ton of optimism there around what's sort of to come in terms of tailwinds for defense. There's already been a bunch of if you look at companies like SpaceX that were very early to this,
mhm,
they were sort of it's sort of jump started by NASA in a lot of ways,
mhm,
and then the Air Force really, and that's how their launch business really got started, and then newer companies like Anduril, which are building the next great defense prime contractor, right? They want to go compete
mhm,
against Lockheed Martin and Raytheon and all those
mhm,
big defense primes. It's been kind of amazing to see what's sort of already happened so far, but I think there's a big tailwind to come given the new administration and
mhm,
really the people sort of around President Trump this time that I think are very like tech forward and are going to allow us to uh, adopt greater technologies more so than we've ever done before. Because I would say one of the big themes at the conference was around reforming government procurement and how hard it's
mhm,
been for startups to traditionally work with the U.S. government. And so, I think we'll see what Doge, like Elon, does with the
mhm,
Doge team and whatnot. I'm optimistic just because there's been so many great people that's joined him to do that.
mhm,
But I think one of the big themes is just reform around government procurement, making it easier for startups to work with the government. I think there's a
mhm,
couple areas in particular that are going to be really interesting to look at for defense.
mhm,
I think companies that are helping with the defense supply chain, so reduce the need to have foreign suppliers in a lot of cases, like our company Freeform has been helping with this. So they work with SpaceX, they work with Anduril, they work with a lot of the
mhm,
aerospace companies, and they're doing metal 3D printing. So it's a team out of SpaceX. So some of the SpaceX additive manufacturing team that left to go get started, and they're building parts for all of those customers. So they have an
mhm,
array of lasers. Essentially, they can melt metal powder and then form parts like unique geometries that would otherwise be very, very hard to do with traditional like machining.
mhm,
And they can do that at a massive scale, right? And so it's like things
mhm,
like that were sort of like made in America, if you will.
mhm,
I think big kind of tailwind around that. So I'm pretty optimistic about what's to come. President Trump is unpredictable to some degree, right? But I also think he's a deal guy, right? You kind of we just yesterday with TikTok coming back, right? I actually am more optimistic this time around in his new administration than before, and I think that was like palpable in DC when I was there. There seemed to be an energy there around like what's to come.
mm. I wonder I wanna start with, like, since you mentioned about, like, Freeform, which is one of your portfolio companies, how do you identify, like, what are the white space and, the hardware space? And since, like, you mentioned, like, those are, like, SpaceX, engineers, they came out and then, like, did this company, I guess, like, how do you think about the founding team? And, like, how do you I guess, like, how do you kind of, like, in terms of deal sourcing, how do you encounter this company, and what are some, like, key factors that you feel like early on that make you feel comfortable about the space? Since I feel like all the frontier slash hardware, um, companies are very capital intensive. Like I feel like it's harder to, judge like based off like their burn rate if something makes sense. Like how do you evaluate the unit economics in the very beginning?
Yeah, I mean, it's a great question because you're right. these businesses tend to be capital intensive in the very beginning, but the trade-off is usually that you're building something that's very defensible and would be hard for somebody to reproduce, right? Like a new competitor coming into the market wouldn't be able to easily replicate what you're doing theoretically if the venture dollars are being used in an app sort of way to build defensibility in the product, right? So there's always that trade-off, but it's something we look at very closely, and we have to believe that there's asymmetric upside into for that technology, right? Like building technology for technology's sake is just it's just pure R&D or just in some cases a science project, but we have to believe that that technology enables you to build like a really interesting business around it, right? We definitely look to your first point. Definitely look for strong technical teams, like teams that we think that can actually build that technology, and then have the business acumen or something that we can do is help put that around them to turn that into a real business. Like the Freeform team, we actually knew them. To the question around sourcing, we actually knew them because they were part of the additive manufacturing team at SpaceX, and then also the propulsion team as well. The CEO Eric was on the propulsion team. He worked closely with Tom Mueller and Elon on the rocket engine. So it was a pretty critical team, and one that Elon really cared about at SpaceX. And so we liked it because we liked the composition of the team because they were not just academics. Because oftentimes where we've fallen flat in the past with frontier tech companies is just betting on a couple academics that have a really interesting technical approach, but don't have that kind of commercial mindset, if you will. And in this case, not only was some of the team builders of the 3D printing technology within SpaceX, but they were also consumers of it because they were literally using it for rocket engines. And if you think about for that particular case, the stakes are quite high, because if you don't build something that conforms to the overall system, then you literally have the risk of things blowing up. So composition of the team, their technical expertise obviously matters, and then I would say like the business acumen, the commercial sort of mindset, that matters as well. And we felt like these guys really have that, and everything we've seen so far has been pretty phenomenal. The other thing I will say is, like, on the asymmetric upside, like thinking big, like going after like a big opportunity, right? Like, if you look at SpaceX, it's like the vision to colonize Mars. You could, there's a lot of people who, don't think that's realistic, or don't think that can happen in some sort of realistic timeline. But like, if you look at everything SpaceX has done thus far, building towards that vision, it's pretty phenomenal. So it's like you set a huge target, and then, to build an actual business, you have to take the 1,000 steps back from that and figure out, okay, what do you do to do that? Well, in their case, it was reusable rockets, right? So you do everything it takes to make rockets reusable. And so, it's, I would say for frontier tech investing, especially given how capital intensive it can be, really pay attention to the founding teams, their technical strengths, the ability to build a real business, and ideally the ability to build something that's asymmetric. Like, it's high. It's in a lot of these cases, it's binary. Like, if it doesn't work, it's probably going to be a 0, and if it does, it can be something massive, right? And so, we don't. Our entire portfolio is not these companies, but it's a good amount of them, because that's where we think like we can generate alpha for venture returns.
For sure. I wonder, so how do you think about like the burn rate at the very beginning? I'm just like, because I feel like sometimes, like, I see founders as a small angel investor, I feel like I see founders list like they are burning very slow, but obviously that's also a bad thing, because like your company is not growing as fast. But from the unit economics to the burn rate, like at the very beginning, call it like the first like 3 years, like, is there any industry standard that like certain burn rate is like I guess like acceptable, versus like what's the threshold for this?
Unintended, yeah.
Yeah.
It's I would say it. In these cases, it usually depends. Like unit economics, you're probably not going to have a better sense for, really. I mean, you can model it, but until the company starts really generating revenue, which for a lot of frontier tech companies, it's years out. So,
Mhm.
we were a seed investor in Freeform, for example. And so, we had a sense of what it could be. And
Mhm.
the reason we were optimistic about their unit economics is because they have a disruptive technology, right? So their cost
Mhm.
basis can be much, much lower than traditional manufacturing or
Mhm.
traditional machining, for example. And so that's why we got excited because, for these types of companies, you have to believe there's going to be a sort of an order of magnitude or orders of magnitude improvement in what they're doing, either on, in terms of being able to generate more revenue or reduce cost, right? In some cases, both. To get you to that sort of asymmetric upside. In terms of burned, though, I think it just really depends on what you're doing. Like in their particular case, a lot of the burn was engineers getting like really, really top people, right? Because for a lot of these companies, if you look at a lot of the AI labs as an example,
Mhm.
right, the reason their burn is so high is a mix of people, but also compute, right? Now, compute, like in a lot
Mhm.
of cases, infrastructure compute has gone
Mhm.
past the cost of people, which is a flip of what it used to be, where it was
Mhm.
mostly people, and now it's more like GPUs, right, for those
Mhm.
types of companies. So I think it just kind of depends on what you're doing. This is where, like, having hopefully some good investors around the table can be useful for founders to kind of determine, hey, for what we're burning, is that translating to value in the product, right? Is
Mhm.
are we, like oftentimes what we'll see with these companies is they'll space out various
Mhm.
technical milestones, like for Freeform it was like, hey, use the seed money to build a prototype printer and
Mhm.
show folks that we can print certain sort of geometries at some scale with the printer, go raise more venture money, and then go build the next gen of that, right? So you show, I think the way I kind of think about it is less monthly, like what is the specific monthly burn, and more,
Mhm.
are you hitting important technical milestones that help you
Mhm.
de-risk the business and the underlying technology, and then help you go rate, oftentimes go raise more money or get access to government funding or whatever it may be, and then help
Mhm.
you alongside that path. But I would say burn. It's hard to compare it to soft, because I have software companies too, and they're, we always look at their net burn because
Mhm.
they've got oftentimes revenue for those
Mhm.
companies. But for deep tech companies, I think it's more about like what technical milestones are you hitting, and then does that help de-risk the company?
Speaking of technical milestone, like what are some besides like initialing prototyping like a particular product, like what kind of milestone should they hit?
I think so. Obviously, there's like building the initial product, and so the prototype and
Mhm.
whatnot. But also working with like commercial partners early. Like
Mhm.
a lot of our even deep tech companies, before they even have the full product ready, they've
Mhm.
got design partners that they're working with, and it's not. I wouldn't say it's necessarily specific to deep tech companies either. I
Mhm.
mean, even our enterprise companies that are building software,
Mhm.
the ones that have founders who have the right sort of mindset, which is
Mhm.
let me not iterate in a vacuum, but work
Mhm.
with commercial partners, work with customers who can be design partners, give me feedback, kind of
Mhm.
rapidly iterate, that sort of thing. I think it's just like good product building. For deep tech companies as well, like oftentimes they'll have like early commercial partners that they're working with, and that's helpful for both investors and, frankly, more importantly, the founders to make sure they're building the right thing, right? Because
Mhm.
the worst thing you want to do is, to the point around capital intensity, spend a bunch of venture money, build something that ultimately nobody wants, right?
Mhm.
Especially given how long it can take to build that product. And
Mhm.
so, I think big thing we'd look for is, companies working with commercial partners, working with design partners,
Mhm.
and having some of that validation along the way. And then, ultimately, building a product that
Mhm.
can scale and actually hit those, whether it may be technical benchmarks or something that frankly is just 10x better than everything else that's out there. It can take time to do that, but oftentimes what we found with these companies when they go to market is that they can be rapidly disruptive when they do, and start
Mhm.
growing very quickly. So I think those are the things that we kind of look for along the way.
I wonder, so like thinking about like the design partner, since like I feel like some company can always since like when it's like a non-paid model, it's maybe easier to get like people to onboard into the platform, become a design partner. But how long does it take for a typical like hardware company to like close someone as actually a paid customer? And what if at the very beginning the profit margin is like fairly low? Call it like if you spend like, you know, 50K to produce something, but you're actually only selling it to like 60K. How do you think about at the beginning if the unit economic is like not super strong, but like, everybody will say it, they will improve the efficiency later
Yeah,
on,
yeah,
but
yeah.
yeah.
Yeah, I mean, look, hardware companies, their margins are obviously going to be different from software companies, and so oftentimes you'll see, companies have lower margins to start, but
Mhm,
there's usually a path to improve over time, and we've kind of seen that across a number of different companies over the years. Like Tesla had negative gross margins when they were getting started, right? It's like if you read the stories about the first Tesla Roadster. I mean, Elon and the team that were literally putting that together as they were demoing it to the first set of customers and partners and whatnot. And so that costs more to produce than they could sell it for. But with a lot of these companies, you get the benefit of economies of scale with manufacturing. And that COGS can come down significantly over time. It's just you have to have a reasonable path to get there. And so oftentimes with a lot of these hardware companies, that's what it is. Like the first set of products at low volume that you're building, it's very, very likely that the margins are not going to be high or may even be negative in some cases, especially when you're starting out, because you're buying components at low volume, so those are expensive, right? And so you can't really get the high margin sort of product right out of the gate, but that can be okay because as you start to get customers, you can get access to better supply chain, better pricing, higher volumes like over time, and help bring that down. It's just like traditional economies of scale, and we've kind of seen that over time across a number of different companies. And so I would say margins is something we pay attention to, but it's more, do we believe in the potential for this company to bring down COGS over time and get to higher and higher margin products? Like if you look at, I mean, Tesla kind of did this amazingly with also democratizing access, like getting access to a bigger piece of the market. Like started out with the sports car, and then over time got to something that was more mass market with the Model S, and now the Model 3, and now have like a whole suite of cars that is I think pretty dominant in terms of the most popular in the U.S. and other geos now as well. So I think it's definitely possible. It's just it takes a long time, and so that's what as a founder, you sort of need to have a strong narrative around how you're going to bring that cost down over time.
For sure. I want to talk about like speaking of like manufacturing. I feel like you have invested in elementary, and maybe we could start with like, what are the problem that they're solving? And then I feel like lately I've seen a lot of manufacturing company or like AI manufacturing software or even hardware exists in the industry. Can you maybe give us like a breakdown on like the overall landscape in like AI improving traditional manufacturing process? And how does this company or other portfolio company kind of fit into these like characters?
Yeah, I think it's a big theme in terms of AI, sort of revolutionizing legacy industries, and manufacturing being one of them that's been like slow to adopt new technologies, right? And so Freeform is sort of doing this with these like autonomous factories of metal 3D printers. Elementary is doing it with using computer vision, and so it's deep learning, sort of revolutionized computer vision, starting in 2012 when it first came out. It was like the early Imagen sort of models, and it was incredible what they were able to do, compared to traditional, computer vision tasks. And so now you've got, the sort of next generation of that, and it's proliferated across all these different legacy industries, including manufacturing. And so what Elementary does is, leverages computer vision using, just regular cameras and, so commodity cameras, and then we'll inspect parts as they're going down the manufacturing line. And they can be across a number of different industries, CPG, electronics, automotive, and they'll help, they'll integrate with the existing plant infrastructure. And so oftentimes it's things like, Rockwell has a lot of infrastructure there, for example. So they'll integrate tightly with that. And then, if a part is defective, they'll move it to a different part of the line. And so it helps reduce like waste downstream. So if you think about it from a climate change perspective, having less like manufactured waste downstream, something like this can be phenomenal for, right? It can help reduce the need for human inspection. So like in some cases, you literally have like human inspectors look at these, components or parts or, consumer packaged goods in some cases. Like they work with a lot of CPG customers as well. And so it's pretty phenomenal from an automation perspective, a waste perspective. And so that's, why they're getting a lot of demand from a lot of different customers. And so I think things like that are fantastic. So, helping, reduce manufactured waste and improving, productivity. I also think, there's a lot of applications and things like security. If you look at companies like Verkada, right, that are applying computer vision to security across both manufacturing facilities, but also just very broadly. So I think computer vision continues to be a big theme. And then, within manufacturing, I think for productivity, for reducing waste, for improving efficiency, I'm hoping we actually see more of an uptick in that, especially with potentially like greater economic progress that's coming with the new administration. And so optimistic about greater use of AI in manufacturing for sure. Because I think from a labor perspective, especially like if you think about just automation, that's where, use of robotics, Elementary is kind of focused on, identifying, parts that are defective, but there's also new companies that are working on like picking and replacing robots for pick and placing. And so you've got companies that can automate a bunch of menial tasks within manufacturing facilities. That I think that's going to be a big theme as well.
For sure. I wonder, so in terms of like, I think like another of your portfolio that I find really interesting is EdgeQ, which is like a 5G system on a chip.
Yeah.
Can we talk about like, both 5G and the chip manufacturing space? I feel like one of the trends I've seen in like the YC startups or just like startups in general, a lot of people are doing the chip testing kind of like companies. And I wonder, like, in terms of like between hardware and software that helps improving hardware, what are some of your takes? Maybe we start with like 5G and then chip and then this like other combination thing.
Yeah, I mean, I think for 5G, it's going to be critical for this next phase of, very relevant for manufacturing, especially like private 5G. So if you think about, having cellular connectivity in, places like factories and campuses, ports, things like that, where it's not easy to have Wi-Fi, or you'd have a mix of 5G and Wi-Fi. So like the private 5G enterprise applications for it, I think are going to be very interesting. We're already starting to see that now on the consumer side, where a lot of us now have access to 5G, given all the infrastructure investment that was happening over the last several years. But part of the thesis with EdgeQ is that you're going to have sort of enterprise 5G adoption, and we're starting to see that happen across both manufacturing facilities to hospitals to campuses and things like that. On the semiconductor side, yeah, it's been like there's been kind of an emergence of new semiconductor companies. So it's been kind of amazing to see, because semiconductors were out of favor with investors in the past. I mean, the original Silicon Valley sort of set of companies were often semi. But in the later years, it was had moved on to other big shifts like obviously cloud and software. But we're starting to see somewhat of a resurgence of that, especially just given NVIDIA's dominance with GPUs, right? So there's a lot of companies that are going after like the next gen of AI chips to compete with NVIDIA's effectively hegemony in the data center space. And then there's also companies that have been in our portfolio like Mythic that are working on more edge AI kind of applications, and there's a ton of new ones there. So I think on the semiconductor side, I'm actually expecting to see more and more of these, and hopefully some of these can grab some of the market share. Like Cerebrus, I think is slated to go public hopefully sometime this year, right? And there's some of these other companies that have gotten to they have like real customers. They've gotten to some scale across different applications in AI, EdgeQ, and 5G. So I actually am optimistic that as long as we sort of have good relations with it, because TSMC is like critical in terms of the foundry, right? So as long as like we can keep good relationships with China and Taiwan and others, I actually think there's going to be a surge of new companies working on semiconductors. On the point of infrastructure for it, though, I actually think that's like we still look at new semiconductor investments, but actually where I think is most interesting is companies actually building some of the software and data infrastructure for both semiconductors, PCBs, hardware. I mean, that's where I'm spending actually a lot of time right now, is like sort of software for hardware. Because I actually think that's interesting, from everything from like companies that are helping you automate like semiconductor, writing, like I'm an electrical engineer by training. And so, like Verilog and learning like these kind of languages for, semiconductor development, that there's less and less engineers that actually have that skill set. Using AI as a co-pilot to automate some of that, I think is quite interesting. Companies that are automating like PCB design, so helping people design boards and things like that, especially around our prior discussion on hardware development. It's an iteration, you're constantly prototyping. Things that make that faster, I think, are really interesting. And then sort of in terms of infrastructure to make it easier for testing, validating hardware, I think is quite interesting. A lot of our companies have had to build some of this in-house. Now there's more and more companies kind of providing that. And then if you think about like other things that are coming, like simulation environments that really, like autonomous vehicles are finally here. We all thought, we were an early investor in Zoox. We thought it was going to happen some years earlier, but now it finally is with Waymo. Zoox is launching in SF in Las Vegas. And so I actually think it's quite exciting in terms of companies that are building software for hardware, because I think there's going to be a proliferation in everything from like semis to other types of hardware, whether it's for defense or manufacturing.
You mentioned about like simulation companies and then software for manufacturer. What does like the future of manufacturing look like nowadays? It's just like a bunch of people sitting in the factory, and what are like, do you envision like in the future it's gonna be people sitting in their home and the stuff are just gonna manufacture itself? Or do you believe in like human size robotics companies that just take over? Like, will the future of like manufacture just be like a bunch of robots that just like do it for you? Or how do you think about the future of manufacturing?
It's a good question. I kind of think about it in the broader sort of the broader way I think about AI, which is like sort of man-machine fusion, right? I mean, there are definitely a lot of tasks that you want to be automated, right? You just like, if you're even seeing with everything in generative AI now, that's automating, sort of the work of a lot of different types of people, like like for example, for marketing copy, there's a ton of companies doing that. There's content generation, video creation, all of that slowly being automated. And the way I kind of think about it is, the idea is not necessarily to just automate away people's jobs, but it's sort of to empower them and allow them to focus on more creative tasks, right? It's like there's a chapter in a book that I co-wrote on disruption for labor, like AI, like automation, like rising automation and AI, across all multiple sectors. And the whole theme was around like, this is like a force for good because it allows people to focus on more creative and purposeful work, for their lives. And so if you think about like in the context of manufacturing, tasks that are, dangerous, that are repetitive and menial, that you don't necessarily want humans to do, but robots would be much better at it because they can be programmed to do it. And increasingly now, given these generative models for robotics, they can do it across more generalized tasks and more unstructured environments, right? So it's kind of amazing. So like human workers like binning various goods that are going to be shipped from an Amazon warehouse, that like, in our lifetime should go away, right? We should be able to have a mix of autonomous robots that are able to do that, right? And so I think that future is definitely coming, but I also don't think that it's just about replacing a bunch of people's jobs, because I think it allows people then to do more creative things, right? Human creativity, I think, is unparalleled still. We haven't gotten to the point of like super intelligence that can completely mimic everything that we can do. And so I'm pretty optimistic about AI being used in manufacturing to increasingly automate, more and more tasks that you don't want humans to do.
For sure. I wonder, maybe we could talk about, like, since you mentioned about Andrew at the beginning of the conversation, so like it became one of the hottest companies last year. And I wonder, how do you think about the business model of a hardware company or a defense company or slash um like I guess like a frontier company? Because I feel like since they're only selling to assuming the government, like how do you think about like the contract size or the sales motion? Um, just curious about your insight on that.
Yeah, no, look, Anduril has done a phenomenal job. They have a very unique team. And they, my understanding is their vision is like to build the next great defense prime, right? And so, they're doing that, and I think they've made tremendous progress. Like publicly, they've already said last year they crossed $1 billion in revenue, so it's pretty amazing. It's inspiring, I think, for other defense companies and defense tech founders, because it shows like, hey, you can build a really, really big business focused on government. I think the thing with government sales, though, it's a long sales cycle. It can be lumpy. You can't compare it to just enterprise software selling, because it's just very, very different. Like I'll give you in 1 year you might have $10 million worth of contracts, and then another year you might have nothing, right? Because it just you have government budgets get delayed, you have continuing resolutions. There's a lot of complexity with selling to government that you don't necessarily see in enterprise selling. So I think the positive is that, and this was a big discussion at the conference, was investors are getting smarter and smarter about that, right? So they know better how to value some of these companies. I think they know better how to advise founders as well. And then the great, like, I think capital, there's plenty of VCs, and so that's actually not the limiting factor. But I think the great thing is you're increasingly seeing founders who want to start companies in the space, right? They're either leaving government or industry, or even completely unrelated. They're in other areas, but they're strong technically, and they want to go build, because they see the opportunity here, right? Like ultimately, where you see great people come is when they see a market opportunity, right? And so I think that's been all very, very encouraging to see. But in terms of the business models, like oftentimes what we'll see is, companies will leverage defense contracts. There's different structures that are out there to help them get started. Like SBIRs are a great way. Effectively, it's a small business innovation like research grant, but it's basically a stepping stone for people to start to work with government. So there's like phase 1, phase 2, and then eventually if you can get to a phase 3, that puts you on a path to get a program of record, which is sort of like a longer term contract with the government, if you will. It takes a long time to get those things, but in terms of the business model, we're seeing some companies now showing real progress with that, like startups, in addition to Anduril. And then there's companies, a bunch of the ones that we look at that are dual, what people often will call dual use, which means they can be used for both the commercial side and government side, right? So you have a business that's both government contracts on one hand, and then on the other hand, enterprise software as a service, right? Because there's a bunch of companies that will just buy software directly from you that are like aerospace companies, other defense companies, but not necessarily the government. So we see a lot of potential for like dual use applications that are out there. So I'm pretty excited. Like I've seen a lot of companies start to get to real scale this way. And look, the U.S. government is the largest buyer of information technology and services in the world, right? And so there's the market opportunity is huge.
For sure. I wonder, so when you are thinking about, speaking of like dual used software, so like what are the, I guess like, are they selling at the same price to like a commercialized user versus like the government, or are they selling some sort of like a little bit differentiated product to the different space?
It's a really good question. I mean, usually you do have to have a slightly different model for government, and the great thing for founders in the space is government's also willing to pay, especially for defense, right? And so oftentimes what you'll have is contract structured such that they're buying licenses plus services. Like if you think about like a lot of the great defense companies, they sort of mixed software or hardware and services with that. It's actually a lot easier for the government to buy hardware and services than it is for them to buy software. So a lot of the times the founders will structure these contracts such that you can sell software but services on top. The Palantir is probably the best example of that. That has now become a true, super high gross margin software company. But in the very beginning, In-Q-Tel, my old firm, was a backer of them very early on. It was a mix of software and services. Like they had 4 deployed engineers that were helping their customers actually build applications on top of their platform, right? And it served both defense and IC, like the intelligence community, where they started. And then they brought on a number of commercial customers as well, and now I think they've just got included on the S&P 500 last year, and so it took a long time. It was like a 20-year journey, but kudos to that team, because I think they've done a phenomenal job to show, hey, you can really build they may be $100 billion company in the coming years, but you can build a huge company, building for defense.
That's so interesting. I wonder, since like, you also invest in some software companies such as Crowd AI, and maybe we could talk about the software side. What are things that you feel like are interesting in that space?
Yeah, well, it was interesting. Crowd was an example of one of the software for defense companies. So they were had this computer vision platform, and where they eventually focused was satellite imagery analytics. We're also an investor in Planet that provides some of the imagery, and then they ended up in Crowd AI's case getting bought by Saab's. So Saab, not a car company anymore, but actually a defense company. They're a Swedish company, but have a U.S. Subsidiary, and that entity ended up buying Crowd AI. But I would say for software broadly, I mean, I think where we're spending a lot of time is around AI native companies. And so, these are the most recent investment I did, or one of the most recent investments that's going to be announced soon, and so I won't take away the thunder from the founders and the company, is a AI native company in construction tech. So they help procure various materials, for GCs, general contractors, and whatnot. And so where we've spent a lot of time from a tech, because I tend to look at things from a technology point of view, and AI is sort of this big platform shift. I think most people agree with that. That's not necessarily like a differentiated insight, but what we've sort of realized is that opens the opportunity for all a number of new companies that are built with AI native architectures, meaning you've got the underlying model, but you'll sort of have this like cognitive architecture built on top of that, where a lot of these companies will have a slew of different models that they're using. they'll fine tune that with proprietary data that they're collecting, and then they're automating some workflow. I mean, you can call it agentic. Over time, we may well get to a full scale like agent that actually can do the work. But right now, I would say it's a little bit more man-machine fusion. It's like human in the loop. You're kind of empowering people to automate some of that work. And so we're been looking at a number of companies that are doing this across different verticals. And I think that's been very exciting because now it's like, before it was, you were going after this enterprise software market that was like hundreds of billions, let's say 500 or 600 billion. Over time, as you start to automate more and more, the potential that you could go after is multi-trillion. So like you think about it as like a labor and services market. I mean, that's like several trillions, like up to potentially like 10 trillion, I think, according to some estimates. And so that's the exciting part for us. It's like, in venture generally, it's like, where's the the big market opportunities? I think with AI now, we're kind of seeing the opportunity to automate more and more. And with some of these new companies, I think they're displacing old traditional SaaS companies, right? I think it's like, this is the new platform shift, like from what we've seen from like on-prem to cloud to mobile, and now AI native. And that's where we're spending a bunch of time. And the thing I get excited about it, like to the earlier point around, allowing people to allowing humans to do more creative things, or having them be able to get more leverage, not needing as many people to do menial tasks, but to do more interesting things. I think that's the power here, and we're kind of seeing it across legacy industries too. I mean, we talked about manufacturing a lot. We're seeing it in construction. We're seeing it in healthcare. So I think that's the really exciting piece. And if you think about like the prize, even like a small percentage of 10 trillion is a huge number. So it's really exciting, I think, both to founders and investors.
For sure. I wonder, since you mentioned about AI native, maybe we could tap on like what's a AI native company look like? Just because I feel like now every company is using AI to do something. Obviously, like AI should be playing a key differentiator of the new product versus the old version of that product. But
Yeah.
in your mind, like what are what's the core thing about AI native companies? Maybe you can give us an example using, since we were talking about construction, like, in the past, like people just, I guess, construct, but like, how do
Yeah.
you think about like, AI native construction company versus like non AI native?
Yeah. I mean, in this particular case, it's the company is, basically using various generative AI models, whether it's OpenAI, Anthropic, and open source. Open source has been pretty amazing. And like even if you look at some of the things that have come out of Alibaba, like DeepSeek, there's a lot of chatter about that over the holidays, because even though there's been sort of constraints put on GPU access in for some of these Chinese companies, they've actually come out with like world-class models. And so you can see how much innovation that's happening in open source, which I think is awesome. But back to the point on these like cognitive architectures. So you're seeing companies be able to leverage these models and figure out which model is best to various tasks, and then use that on unstructured data. In this particular case, it's data that's sitting in images, PDFs, other places where you can't just get API access easily, but it's quite unstructured, and that's where I would say generative AI really shines. And so these new companies are kind of building model first, right? They're kind of thinking about, okay, you have a sort of have a reasoning layer that thinks about which model is best for them to use across which kind of data, and then they will then sort of kick off some kind of workflow based on what the task is at hand, right? And so in this particular case for this company, it's like, hey, generating quotes based on a particular fixture I need to build, or a part, based on what my kind of customer wants. So it kind of kicks off this like automated workflow, and then can do the kind of end-to-end automation that a human would otherwise like manually do, right? And then it gives that output to the human, and then they can make a that part of it is not quite automated yet. You still have a human in the loop, which I think is important to deliver the level of quality that's needed. But it's sort of companies that are, rather than, because historically with SaaS, with traditional software companies, AI is sort of a feature, right? It's like, I built, a software application, and now I provide like predictive analytics or, something like that. Where now, it's sort of this like service as software, whatever you want to call it, end-to-end automation, where you have more and more companies that are, building model first on proprietary data and able to like automate a workflow from that. I think that's the interesting piece. And before we sort of thought like a lot of these companies would get dismissed as like, oh, you're a wrapper for OpenAI, or you're a wrapper for Anthropic. I think what we kind of realized is actually it's very hard to, like the raw outputs of a model, and using that to deliver business value on the other end. There's actually quite a bit of work to make that successful, right? And so the companies that are sort of building the application layer AI using AI native architecture, so figuring out which model to use, have a proprietary set of data that they've kind of generated or gotten access to over time, and then it can actually automate the workflow, whether it's agentic or what have you, to deliver some value to the end customer. That I think is interesting. To do it horizontally, I think can be challenging, but I think vertical applications like construction, manufacturing, healthcare, I think are quite interesting. And so that's where we've been spending a lot of time.
I'm taking notes. I wonder, how do you, like, how do you kind of like spend your time on these like company that with proprietary data? Just because I feel like whenever you come across an AI company, either they are, so like I've heard of like founders that are trying to acquire proprietary data, like literally buying them, and then they're raising money to buy them, versus there are obviously some companies that are like getting it in like a smarter way, like they just like partner with like a certain industry players that are like really big. Which kind of approach do you more leaning towards to, since like if you're gaining something for free, there's a cost, which is that company either just gaining I guess like you can't work with a competitor sometimes, or like there's like some other, I guess, concerns. Like, how do you think about acquiring these like proprietary data? But on the other hand, when you're buying, it's like super expensive. So
yeah, look, I mean, I think there's different ways to do it, and the honest answer is it kind of depends on what you're doing and what field you're in. But in some cases, it may make sense to buy data, right? Because it just gives you a leg up. It can be faster. Like if you're working on something, you're working on something new in like satellite imagery, for example, it's likely you can buy data from the existing satellite imagery providers like Planet and Capella and the larger ones that are out there too, like Digital Globe. But and then we've got companies in like the medical imaging diagnostic space that did a mix. Like they had partnerships with hospital systems where that's how they acquired their data, right? Because it's patient information, it's highly sensitive and highly regulated. So they built partnerships with hospital systems early on to get access to the data and build their models that way. So I think it depends. It's very likely you'll have to do a mix of all of the above at some points. Like partnerships early on when you don't have a lot of capital probably makes a lot of sense. In some cases, we've seen that for equity. Like the hospital system will get equity in the companies and they'll provide the data that way. In some cases, there might be data that you can you frankly just buy, especially as you get larger. I think Harvey, the AI lawyer company that's being used now, raising quite a bit of money, it was looking into buying like legal databases, right? So in some cases, it may make sense to do that, because what I was at NeurIPS sort of end of last year. It's the big AI research conference, and everyone was talking about like we're sort of hitting the scaling laws are coming into play with respect to pre-training. Where the internet has only so much data. It is growing, but it's not growing fast enough to meet our needs of kind of building the next set of like foundation models, right? So there's only so much data that's out there on the internet, and so where we've seen some of these vertical AI companies be able to differentiate is getting access to proprietary data, right? Like they'll start out with like these base foundation models, but then able to fine tune based on data that they're able to acquire. And I don't think it's a crazy thing to use venture capital to acquire some of that, because that can be a big source of differentiation.
I love that. Okay, so since you mentioned about neural ribs, like, so I feel like a lot of the AI researchers will publish their paper, or like I guess like just like announce their paper there. I'm not
Mhm.
quite sure. I know I have some friends who went, and but like I wonder, as an investor, like what are things that you thought were like really interesting coming out of that conference?
Yeah, I mean, I would say, just given the earlier point of, yeah, Ilya, who was one of the co-founders of OpenAI and has started a
Mhm.
new company focused on like, I think it's called like safe super intelligence, right? If I remember correctly. But he actually had a great conversation about this, a great talk, because I think he was accepting an award for best paper over the last 10 years. And so he talked about like pre-training essentially being dead, but there's new things on the horizon that will help us like get to in terms of what the next 10 years looks like. So I think companies that are working on like reasoning models are really interesting. I don't know if you've played with OpenAI's like O1 model. They've come out with an O3 model that I think will be publicly available soon. So seeing a lot of it's sort of like if you've ever read Daniel Kahneman's book around like system one and system two thinking.
Mhm.
Now, the AI model is able to process, like think a little bit more and give you a more reasoned answer that should help generalize across more and more tasks. And that's not just like predicting the next token, but actually a more informed answer, if you will. And so that I think is quite interesting in terms of next set of models that are coming. Um, I also think this is an area where back to the conversation around robotics and simulation, but new world models. We had a dinner with Basis Set and Jan LeCun, and this is something he's been talking about for quite some time. He's the head of Meta's AI research
Mhm.
arm, and kind of next set of world models. So like an evolution of like image models to like generative image models to video models to like world models, especially in the context of like robotics, I think is really interesting, because it's not just predicting the next frame in like a video, but actually able to generate like entire 3D worlds, which I think is really interesting for like robotics and simulation use cases. So I think that's going to be great. And then everybody talks about AI agents. I think there's a lot of disagreement around what that means, and so that's why some people use like agentic to
Mhm.
describe like as we're getting closer and closer to that. But I do think that's coming. I think to the earlier point of like, hey, vision is to colonize Mars. How do you take steps back from that and work towards that vision? I actually do think we are going to have a number of tasks that we can automate with AI agents, and so I think that's going to be very exciting. So I think there's a lot of companies working on that. There are a lot of the vertical companies I talked about. That's on their roadmap to build full-fledged AI agents. So I think we're going to see that over the next 5 years, and a lot of great companies are going to be built from that. I think like it's interesting. It's like if you look like 20 years out, what's one of the most valuable companies, and I would bet like that has yet to be built, right? And that's the most exciting thing, the scale of innovate. Like who would have thought like Nvidia would be the most valuable company in the world, right? If you would have guessed like 10 or 15 years ago. And I would say for the next set of like most valuable companies, I think it's going to look different from the mix that we have today, especially if you think about over the next like 20 years.
100%. Okay, so I wanna end with like a 1-minute fire round. So, what's your favorite book?
Ooh, favorite book. I probably. Oh, that's really hard. I'm a huge Harry Potter fan, and so
Oh,
I would
wow.
say it was probably the Sorcerer's Stone, the first one. That was just like got me into it.
Who would you invite to your dinner party?
Who would I invite to a dinner party?
Mhm.
Um, Jeff Bezos.
Um, who made the biggest impact in your career?
Oh, that's a great question. I would say, I mean, there's been a number of people, but one of my early one of the founders of DFJ, Steve Jurvetson, he was one of my early mentors, and I think he sort of helped shape my thinking around like thinking big and investing in frontier tech.
Uh, where can we find you outside of work?
I say right now it's running outside because I signed up for the SF marathon
Oh my
in
god.
July, so I need to I need to ramp up my training. It's starting, but I need to ramp it up. I have run it before, but I'm trying to improve my time this time, so I'm ramping that up.
Wow, that's pretty intense. And well, Mo, thank you so much for coming to the show. This is such a master class on investing in frontier technology.
No, it was great. Thank you for having me. This was fantastic, and again, kudos on everything you've done since I remember when we first talked like years ago, and it's amazing to see everything you've done. So thanks for having me on.
Thank you so much. Okay, let me quickly end this stream.